All right, what's good? All right, so what I want to do is create a system right now, and I want to show you what I want it to do. So, if you can see the blue line, I want it to push away from that blue line and then go short because it's pushing lower and it's far away from the moving average. And then basically you'll ride it all the way down until it crosses over that moving average again. That's literally all I'm trying to do. So we can start this out as a new system, and I'm just going to call it Trend Following 101. Kind of want to do it like that. TF 101 1, and I'm going to call it 1 because this is the first iteration of it. So we're going to do a simple moving average. I think that's really simple. There's going to be one difference with it. And the difference is going to be the length of the moving average is actually going to depend on the volatility. So I think that's going to be interesting. So let's see here. If we do it as a measure of volatility, I think that's going to be interesting. So let's do that right now. So basically, I have some of this coded somewhere. I think it's right here, somewhere here. Trend following entry. Man, oh man. Man, oh man, oh man. Yes, I want to do it end of day. I want to make it a, the reason I want to make it a intraday system because then we can use intraday margins. It matters so much, dude. Because who's going to put down 40 grand when they can put 4 grand down and control the same amount of money? Obviously, you want to use that margin. And people would give this money here expecting volatility in their money anyways. You're not going to give over a portfolio in nest egg. You're going to give over something that's more that can be more variable. So at this point, I don't know if I'm going to use any of this code. I don't know what I'm going to use with it. Basically, all I want to know is when this market goes away from that blue moving average by a certain measure of perhaps ATR. Let's say when it goes, I don't know what's normal ATR. Let's get ATR up in here too. If it goes, I don't know, a certain amount, let's say 3 measures of ATR, I don't know. And then that means you use average true range instead of points because that's what it is, man. ATR, I'd use 59. Yeah. I like a deep average. I don't want a very, very quick average. All right, the red line is it. The red line is the only thing I care about. So in this case, it's at 10 o'clock. The average is about 4.5 to 5. So about 5 is your average true range. I want to get in on this downslide at probably 30. So that means we would get in here and we would ride that sucker all the way down until it crosses over the blue line, and it would go all the way to here. So we catch a massive, massive, massive move. That's exactly what we're looking for. So the market has to push away from the price level it's at and not come back. So in that case, we're going to be looking at the market has to go 6 ATRs away, roughly. So let's do that. This is going to be on a bar close basis now. This is not going to be intra-bar at all. So it's going to be slower to get into the market on the basis of 1 minute. The reason I do that is because I can test 1 minute back many, many years while most of my systems, actually all of my systems, are intra-bar order generation. So intra-bar systems are, you can only get about 6 months of tick data or second data. But if you get a minute data, like this one is, 1 minute data is my smallest time frame, you can get many, many years of data instead of 6 months or 9 months, which I have data stored. So I keep on storing it. So it's going to be I only have 9 months. Pretty soon I'll have a year, but really it's a small amount of data comparing to 1 minute data, which is accessible. So that's why we're using 1 minute data. And what made me have belief of this 1 minute data is it being fine using 1 minute bar closes. You don't need a complex system that uses intra-bar orders. Like it's only a minute. Like let the minute close. If the conditions are met, send it. It doesn't necessarily matter so much. And my dad's system uses 1 minute bar closes, which I'm looking at right now, and it works great. It makes money. So if the bar closes, and let's say this is going to be the big begin statement. I want it in caps because this starts pretty much everything. Everything is housed in this begin statement. So I'm going to say if the close is greater than or equal to moving average, which is that blue moving average on the screen. That blue moving average is a slow moving average. It's about 1 hour. So it's a slower moving average. So it's about 1 hour. If the close is greater than or equal to the average price hour, the hourly moving average, plus 6 ATRs, then we're going to buy it. So then we're going to buy one contract, next bar at market. Do you want to use a stop order? Do you want to use a limit order? Whatever do you want? I'm just going to use market. I think it's fine. It's not, I don't think we're going to be that exact. If things get to the point of where we really, really, really need to be exact, then sure. This is your sell short order. Now, these need to be housed in a market position is equal to 0. So we need to be flat for this to begin. The reason being is otherwise it's going to keep on ordering market orders because it doesn't know that the position is flat. So market position being equal to flat makes us able to take that position only once. So once we're long, I want to do exits. And for exits, I would just do if market position is equal to long, then begin. And then if you can see easy language is all if statements. Everything's if statements on easy language. I mean, that's the move. It's all easy. It's easy language. Anyways, so if ever the price gets above the moving average, so we'd be short at this circle, right? If it ever gets above that moving average, like here, boom, we would get out. So in this case, I'm going to use a stop order on the moving average instead of a market order, because I don't want a massive bar to happen and then we get out at the close. We want to get out as soon as that is touched. So for that reason, I am going to use a stop order now. So so if I'm long, I'm going to do a sell. Stop. All contracts at moving average 1. Stop price. There you go. And then we're going to do the same thing for if I'm short, except we'll do a buy to cover. All contracts at moving average, stop. Because when we're short, we're going to be below the moving average, kind of just like this. And if price ever gets above that blue line, we're out. Yep. I just want to label my entries. Entry long. The reason I label my entries is because then I can identify which part of my code is messed up if it's not working. Okay, so now at this point we have our entry, we have our stop. Is there anything else we need? Is that really it? I don't think that's gonna work. I think I'm gonna need end of day exits. That's good. I'll include end of day exit. Oh, when do you enter? Yeah, that's a good point. When do I enter? Well, I only enter time is greater than or equal to 8:30. I don't really like entering at anything at 8:30. So I might move it to 8:45. Now, the problem is I need to be I don't want it to open crazy downwards and just because the time hits at 9, then you make that order. So basically I need to be able to between 8:45, hold on, we're going to do something else here. We're going to do conditions to make my position eligible. So the conditions are this: I need it during the day. It needs to move away from the average price, that blue line. So right now it's 12:55. Right now, I'm looking at November 20th because it was such a good trend day. So November 20th at whatever time, 10 o'clock during the day, then it went up. Okay. Oops, I'm supposed to be in this chart anyways. That's why I was confused. So 10 o'clock, if it pushes away, I don't want it to be already pushed away right when I start at 8:45. Like, I want to be able to use intraday margins, okay? I need to use intraday margins, so it has to be from 8 a.m. until 1500. And I don't like the pre-market into the open. I want the open to happen, so 8:45 is my start time, in my opinion. Could be 9. It doesn't really matter. I'll do 8:45. But at 8:45, if price had already moved down like this, and it just happens to be 8:45, then I sell short. I'm selling short after the move has already happened. So I don't want that. So at 8:45, I need to see price touch the moving average or at least cross over it. So I need the entry, the actual push to happen during the day. Not has already happened. So how are we going to do that? Tell you what. That's the hard part. Yeah, otherwise you're just going to get triggered in at 8:45 because it dropped at 8:30. Why didn't you get in at 8:35 then? because that's when it's supposed to drop. So you don't want to do that. So you want the signal to actually, the origins of the signal have to start at 8:45 or onward, not from before. So we need the signal origin to be in that time frame. So if time is greater than or equal to 8:45 and time is less than or equal to, I don't know, 1400, do you want to take power hour trades? Not really. I mean, I could. This is a trend following system, so if you want large pushes, you can use 1430. I'm not going to have the last half hour because you'd have to get out at end of day anyways. It's not really worth it. So we can mess around with that later, but if time is greater than 8:45 and less than 14:30, this is my window. So then begin if time is equal to 8:45 and close is greater than moving average, then I have to wait for the close to be less than moving average. Really? Yeah. You need to wait for it to cross over again. It's kind of ridiculous. But that's just the way I'm going to do it. I want it to be fully reset, okay? I don't want the pre-market or the morning to push it in one direction and then I get in at 8:45 just because it happens to be 8:45. No. So I need it to reset. So if the close is greater than moving average, that means if we're above the moving average, I need to be able to see it below the moving average once. At least crosses over once to get this, the origin to begin. So if time is equal to 8:45 and the close is greater than the moving average, I need to make sure that it goes beyond below it. So then starts above is equal to true. Else starts above is equal to false. Now, if starts above is equal to true and close is below or equal to the moving average, then origin complete is equal to true. We just make up our own names to this freaking thing. All the variables you can make up your own. So it's whatever. So that's what we're doing. So basically I'm saying is if it starts, it happens to be 8:45 and it's already pushed lower, it would be a signal to go short, but it was a signal at freaking way earlier. Now it's at 8:45. Now I'm eligible to trade, but the signal has already happened. I don't want that old signal. So I'm waiting for the market to go and touch the moving average to say it's near average price again, to then resume. Then I allow myself to look for trades. So I don't want to take an old trade or an old signal, a signal that I should have taken already. I want fresh signals during this day. So that's what I'm doing right now. I don't know if that's better or worse. I want it that way. So if starts above is true and starts above is false, origin complete is equal to false at 8:45. Great. Now, if starts above is equal to true and it closes lower than the moving average, then origin complete is true. On the contrary, if starts above is equal to false, which is below the moving average, and the close is greater than or equal to moving average, then origin complete is true. If origin complete is true, and origin complete is true, then you can take signals. Remember, Remember that time has to be like that, and origin complete equals true. Then you can start taking signals. You can take exit signals whenever you want. I don't have a time frame. I don't want to be stuck at 1435 and like, oh, no more exit signals. No, you always have to have that exit signal in. And that's it. That's all she wrote. I think we're going to have to test this and see if it runs. I think it looks great. Now we're going to have to put all our variables in, which takes forever. It's just a lot of typing. If there's anything that could be automated, this would be the automation part. Moving average 1. Yeah, none of this. I love how none of this is intrabar persist. It's like so much more simple. This is real easy, very simple, very I'm not worried about the code doing technical things. When we start getting into intrabar systems, it can be such an issue sometimes. Everything about it, really. Because there's parts of the code that don't work and parts of the code that do work because it's intrabar. It gets so technical. So much more technical. Hold on. My dad's L goes down $87 right now. We're short. Hopefully the market goes down. All right. Is that all we need? Yeah, just send it and see what happens. All right. So basically, if close is greater than moving average, then starts above, else starts above equals false. By the way, origin needs to be false. Yep. Go ahead and see what happens now. What's wrong with this? Sell, stop, all contracts, next bar at, I don't know why I didn't have that in there. All right, I'm trying to just basically have this done. Essentially, all I'm looking for is a moving average system that shorts when it runs away from the moving average. So let's just take a look at what happens. Let's include the system. What is this called? Trend follow 101. Trend follow 101. There it is. All right. Yeah, I mean, just send it. See what happens. There it goes. Perfect. Look at I pretty much nailed where it's supposed to go short. That's exactly what I'm looking for. And we should get out at the blue line. Let me take off ATR so I can see the chart. Let's see where it gets out. It should get out way at the blue line. There it goes. It exits where we want it to be too. So it's doing what we want it to do. Let me make it more visible and see what the results. This is one of the most simple systems ever. I highly doubt it's profitable long term, but it was very good in these moments that the market moves and trends. Let's take a look in the past couple days, 5-10 days. I just want to see a few of the moves here. All right, so it was short today. It dropped recently. It did. I remember seeing that drop. So it did drop just recently within the past hour. And it drops fast enough to trigger us short. And that's basically what happens. We go in that direction. Let's find another trade. Probably nothing in the Thanksgiving time. I think the 25th went up a lot. So I'm thinking that would work. This one orders at 10:45, does nothing and gets stopped out. So let's find another one. This one break even. It's pretty good. I'm not seeing any big losses. That's the 25th. Nothing really. We didn't get in long the 25th. We did get in long. We just got in long way late. It didn't run away from the ATR fast enough. So that's interesting. The nuance that I wanna put on this, the twist here, is an adjustment of this moving average. So it's not always an hour. It's bigger if it's slower. No, actually it's bigger if it's faster. So if it's more volatile, up and down, crazy, then I don't want a moving average so tight to it. So I actually want to make it slower. So there is an adjustment that I'm going to test out. Thus far, I'm seeing decent trades. It's nothing crazy. And keep in mind that there's no target on this system. Look at this. This is the November 20th one. There's no target on this system. What do you mean you have no target? I mean, there's only a stop. I mean, if it goes away from the moving average, we could just go in that same direction and allow the moving average to just be the stop. It's the average price. So if it goes back to the average price, we get out. And really the belief from this system came from me trying to mean revert. I was trying to do the opposite here. And every time I tried things, I use VWAP for an average price. It's more accurate than the average price, the moving average. Because moving average is time-based, volume is what actually matters. So I used VWAP, and I'm like, why don't you want to go back to where price is comfortable? I don't get it, price. And it turns out that all those systems were so hard to make work, I just flipped it over. I just said, all right, the VWAP chases the price. And sometimes the price just, when it's trending, it doesn't want to go back and touch VWAP. It's like chasing it, and it's running away from it. Price literally runs away from the average price, and that's what happened here. The price is just running away, just running. And like, why doesn't it go back to average, snap back to average? Because for whatever reason, it doesn't want to. It's just in the idea of it's using this average price as a stop. It's a variable stop, and that can only go in our direction. So it automatically trails for us. So I think most trend following systems probably use this, although I don't know for sure. I know from a podcast I was listening to, he describes pretty much everything about they're describing like, well, typically what we would want is price to go strong in our direction, and then slowly, once it's already way at the high, really far away in our direction, then it slowly curls down, and then we'll probably get stopped out. Like, obviously that's a moving average because if you slowly go at the end, the moving average hugs your price. So like, look at this one, it goes up away from moving average, but then slows down and goes sideways. Then you get stopped out because that sideways action is pulling that moving average closer to current price. And then we get out at the high, get out at max profit. So overall in the past a couple weeks, this thing has done really well. Let's just go ahead and go look at it. I've been looking, just scrolling through the trades, and it looks like it's doing exactly what I want. So I'm going to test on bigger data now. Let's test on November to December. 1 month. Look how fast it loads, bro. It's so simple. I'm saying that because my other codes, like, I literally have to like watch a YouTube video while this shit's loading. It takes forever. Because that's looking at every second. This doesn't. Okay, it looks like pretty much the same graph with a few more trades going sideways. this massive move was November 20th, the one that I showed you. In terms of profit loss, the profit loss is variable. I mean, sometimes it's larger risk, sometimes it's smaller risk, but it's always 6 measures of ATR. So it's always on the basis of if the market runs away from it on the basis of ATR. So generally, the best breakouts are when price is very low volatility, like what it was today, and then it pushes strongly, and that's a good short. That's a decent short because it pushes strongly, and we want more volatility. It seems to have slowed down already. I'm surprised my sideways system's not doing it. Oh, 1421. It's already late in the day. Never mind. Otherwise, we would have been picking this up because I can tell the market slowed down from where it was pushing. So the moment it starts slowing down is when we start going sideways on it. That system today made $1,200. That's really good. For a 15 grand account to run that, $1,200 is really good. I'm excited about that system. But anyways, the trend following system, past 30 days did really good. You can see the results. About 7 grand, 6,500, mostly due to that massive win on November 20th. But that's the point. What do you mean you just get a lucky random win, my friend? Trading is full of these random one-offs that destroy your account or make your account. And when we have a trailing system, one that it can only go in your direction, you do have an unlimited reward. And this is an example, a prime example. November 20th, we allowed it to go in our favor for as long as I wanted to do it. Let's test October. 1031. Yeah. Man, it loads fast. Oh my gosh, I see a lot of red on the screen here. Okay, so it finishes negative $300. Wow. Finishes break even. 21 trades this time. Still it goes up and then goes crashing down. There was low volatility. Seems like it wants to break out, but then comes back. Those are the losses. What's your biggest loss? $1,400. 1016. I do want to see what happened there. 1016. I want to see what's the circumstance of our loss. Yeah. I like the system. It's really simple. It's just simple. And I'm messing around like on the smallest of frickin' seconds and dealing with mean reversion, scaling in, scaling out. It's just hard, bro. It's hard to do that. So I do like simplicity for a change. All right, there's 1016. All right, here's the biggest loss. So let me see if I can make this bigger. All right. So what happens is, oh man, we take 2 big losses right away. So what happens is that the market's doing its thing, and then it pushes lower. We don't get in short because it must not have been aggressive enough. Really? Because that looks like it's gone. Oh, not 6 ATRs. Not 6 ATRs away. Interesting, from the blue line. And then it finally rips to go 6 ATRs away. Boom. And then we start shorting literally at the bottom, and then it comes right back to average price. We tried it again, pushes way lower, 6 ATRs away from average price, and then zaps right back and loses. So that's how you collect losses. What actually happened during that day is the market dropped, but it came back. They come back. The rips come back. So once in a while it doesn't. Once in a while it just lets go to the downside. This is taking longs and shorts, of course. Is it? taking 13 shorts, 8 longs. Yeah, it's taking them both. Okay, it's doing its thing. So I dig the results, but I think what's going to be really, really interesting is changing the moving average based upon the ATR. It's going to be wild, bro. It's going to be wild, dude. What I'm going to do, I'm going to wait. Hold on. I'm going to test this, but I definitely want to test that. So it's going to be interesting. I want to see the results of the past 3 months, though. Let me get one more month in, because that month was break even. November was a great trend month. It made money. So let's look at September. Look at that one, dude. Look at that one. Market just moves up from a low state of volatility. It goes upwards. We go long. And it goes all the way. And then end of day closes at 1500. We get out. Does exactly what we want it to do. Is that the only win of this month? Let's see. Pretty break even, bro. I mean, this is not good. We take a few less trades. Really nothing substantial here. You won't see, I mean, this doesn't look good, but at the same time, you're taking a massive risk if you're doing the opposite of the system. The reason I say that is because you don't have a stop loss on if you do the opposite of this system. This system does not have a target. It literally can go as much as it wants in one direction. So there are moments in the market where it does go in one direction. We just don't happen to be in on those during this time, and we're still break even. So I'm really actually just fine with that. So let's just do from September to now. Those 3 months put together, and you're going to see just it inflame in November, and that's it. Really? Yep. This is the September, did nothing. October went up and then came down. It did go down, yeah. The rest, half of October was bad. And then boom, November lifted off and staying at 7 grand positive. So I'm going to take a picture of this graph and compare it to an ATR based moving average. So now it's going to get crazy, where instead of having the moving average be 59 minutes, about an hour, I don't know why it shows 59, but we're going to do we're going to say the moving average is going to be based upon ATR. So think about it. I already looked at ATR. It's about 5. Okay, on average it's about 5. So 5 times what equals 60? 60 divided by 5 is 12. So 12 ATRs is my length of the moving average. So the reason this is important is because this moving average is what dictates a lot. It's what dictates entries, and it's what dictates exits. So if the moving average during a state of volatility like it is here, where it's volatile, big bars, it's increasing volatility, we want the volatility, if it's large volatility, we want the moving average to not react as much to price. We want it to be less reactive, to be more aloof. So the reason we want ATR, I would think it would work out better. I don't know if it will, but I think it would work out better if price is not as the moving average, which is what this system's built off of, if that is non-reactive, more non-reactive, okay? And then when volatility gets smaller and smaller and smaller, we're paying more close attention to the changes of price. Okay, so let's see what that does. I don't know if it'll work or not. Let's see. Remember, this is the picture. We made $7,000 in the past 3 months. Now let's do it with the change. Oh, darn it. Try to reference back more than that. Hold on. It's more than 60 bars back at one point then. A lot more than 60 bars back. So we got to do, I'm going to say 1,600 bars back. I don't care. Better not go over that. Oh, you can take out intrabar order generation. Thank you. You don't need intrabar. All right, send it. All right, let's see what happens here. No trades generated. Why not? Why? No trades generated, really? All right, hold on, bro. I need to print the moving average. Yes, sir. I need to print that moving average. So I need to know where the moving average is at this point. So like at this point, at 68.25. Hold on. Once clear print log at the top of every single code I've ever done, because then my print log underneath the chart clears and restarts every time I run the code. So at this point, I need to know where the blue line is. I need to know where this blue line is. 9:21. So at December 1st at 9:22, December 1st at 9:22. Where is price? Moving average at 9:22 is at 467.95. What? $467? That doesn't make any sense. Hello? How are... Bro, price is at 6,800. How is that at... How is price there? So obviously no trades taken if that's the case. I don't get what the deal is, bro. Briv. What are you doing, Briv? Let's change it back once and see what happens. Briv. So I think it's going to outperform this. Yeah. I think so. All right, now the moving average is back. It's placing trades, yada yada. But how come that's the case? What's ATR usually? Let's just see what ATR is. What it says ATR is. Okay. Interesting, man. Interesting. ATR, they say right now at 9:45 and 12:1. Man, oh man, oh man, oh man. $4. All right. 4 is the moving average. So I'm saying 4 times what? 12? That's not that. That's 48. What's wrong with that? I don't see anything wrong with that. ATR times 12. What the hell is wrong with that? I don't know why we're having issues here. Why wouldn't ATR times 12 be anything different than 48? And in that case, how come the average price is 700? How was average price 700? I don't get it. Do we really have to do an array? I don't want to make my own average, bro. How come price is 700? Price was not at 700, bro. It makes no sense. All right. Oh, it has a decimal point. Is that really the problem? Oh my gosh, it has a decimal point. You know what decimals do, bro? They fucking half things, they quarter things if you multiply them. So I don't know, maybe that's the problem. So we're going to type in, we're going to make this value 1. No, we're going to make this value 99. I always start from there. So let's do value 99 is equal to, we're going to round this. We got to find my rounding code. Wherever rounding code is. Where's the rounding code? Anybody? Anybody? Is there anything around here? Where's my rounding code? Whatever. I think it's mod. Mod of this. Hold on. I gotta find mod. There she is. All right, hold on. So we've got value 99 is equal to ATR times 12. ATR times 12. The reason I'm doing that is because there we go. Is because I want my moving average to be variate. I want my moving average to adjust to the volatility. That just looks like a lot of parentheses right there. That's a lot of parentheses, my friend. All right, now send it. Let's see what happens. Value 99. Let's see what happens. Well, if it's the decimal, that fixes the decimal. And does it do anything to average price? Average price is even more screwed up, bro. Why? Oh my gosh, I don't get it. I don't get that at all. I don't get that, bro. That's so weird. How are they saying average prices? Oh, 1,000. How the fuck is that possible? It's not possible, my friend. It ain't possible. So I might just run three different moving averages and just use which one. I could just change out which one uses which based on ATR. All right, fine. Let's run it. Let's do high volatility, low volatility, mediocre volatility, please. All right, sounds good. All righty. All right, what is high volatility? Well, right now is about 5, right? What's the ATR right now? About 2.5. Right this second is about 2.5. Okay, that's normal then. Let's call it 3 is normal. Let's say 3 is normal. Greater than or equal to 2. And ATR is less than 3. Then moving average 1 is the past hour. Now this is going to be fun, where we're going to adjust volatility, or adjust that if it's, let's say, If it's great, if the ATR is greater than 3, I'm going to make it, or let's say 3 to 5. 3 to 5. I'm going to make this, instead of an hour, the past hour, it's going to look at the past hour and a half. So 90. And then if it's more than that, if it's greater than 5, if the ATR is greater than 5, man, this shit's moving, bro. This is like, it's moving. So we want to adjust that for the past almost 3 hours, honestly. Let's say 100, what is it? 100, what's 3 times 60? 360 minutes. That's a pretty big jump. All right, let's do that. 360. Alrighty. And you know what? I need to be able to see this line in the chart, so I'm going to do the same thing with the average true range code. So I can see that adjust as things go on. So once this is coded, then we'll see it in the chart, and it's going to be dope. All right, now if it's low volatility, we want to look at just the past half hour. So if it's less than 2, it's low ass volatility, bro. So we're not going to be looking for the past hour. We're looking for the past 30 minutes, then 60, then 90, then 360. I think that's a big jump in the volatility times, but that's all right. Alrighty. That's all she wrote. That's all we have to do. It's all based on ATR, really. That's what makes the blue line the blue line. So let's go ahead and look at this on the average true range and see what happens. Man, there's a lot of junk on the average true range. I don't want any of this. I don't want any of this. Oh, this is ATR? No. I'm talking about my moving average, Holmes. Looking at my moving average, Holmes. All right. Thank you, sir. Now this is all jacked up too, isn't it? All right. For the sake of simplicity, I'm just Xing this out quick. All right. We're just doing this once. So then I can go right back to this code and recomment it out. And it'll be all right. So basically, I just want to make sure this blue line adjusts with volatility so then I can know if my strategy is actually getting in at the right moments. So what we're going to do is we just need to create that ATR, and that's it. That's all she wrote. That's all she wrote, man. That's all she wrote. All right. Excellent. And then go ahead and plot. Go ahead and plot the average. Hopefully that makes sense. See what happens there. See if that blue line changes. Did it do it? Oh, it's thinking. Oh, hell yeah. The blue line changes like crazy. All right. That's exactly what we want. So what happens here, and I want to say, let's take a look at the system now. Let's run the system. Send the system. Perfect. All right. So now it's getting interesting. Say the blue line doesn't look smooth anymore. And that's okay. It's okay. We don't want it. We're not looking for smooth. We're looking for profit. So the reason it changes drastically, it's not like it grows that fast. No, it's a measure of volatility. The market got more volatile, so we give it more space. So this moving average is not looking back the past hour. it's now looking past the 3 hours. So if you pass 3 hours, price was actually naturally higher than where it is now. So that's why it gives this price more space and time to move in our direction. So we're drifting, we're far away from average price, and then we get in short, and that's what happens. So I do like it. I just want further clarification that this thing works. Not necessarily if it makes money. I just want to make sure that it's doing what I want it to do. And now we're finally can compare our results to where it was. Man, it doesn't take many trades like this. It does not place many trades. Really? This went up that far, and you only get in at the high? That's horrible. That sucks, bro. That is not what I want. I wanted to get in right away. But it does get out. It doesn't even enter in this chop. That's crazy. Oh, it's at 8:45. Yeah, it just begun. All right, well, let's see what happens. I just need to see one more trade to see if it does what I want it to do. Here we go. We've got a stretch upwards. It's going away from current price. See how this average price just hugs it? It's a great thing to do with your stop loss. Just keeps on going up. So when the market's trending, we capture that. So we captured it way late. So I don't think this is going to beat it. Is it the past 3 months? Remember, we made $7,000 up and down. We went up and down, but we made $7,000 the past 3 months with the original, just always 1 hour moving average. Now it's volatility based moving average. See what happens. Way better. Wow. Way, way, way better. You make $24,000 in the same amount of trades. About the exact same trades. Almost identical amount of trades. Almost 60 trades. Almost 60 trades. Wow, I would think it would actually do worse from what I was looking at. We get in so late. How does this make money? Really? That's really good. I mean, look at this one. Market moves away. You see this average price go down. Like, we get in long. Our average price immediately drops lower. We're giving ourselves even more space. We were a risk box this big. Now we have a risk box this big. And until that market slows down, which it does right here, it goes up and it slows down in our direction. It slows down. We immediately shrink our stop loss. We immediately shrink our stop loss and make it smaller. And if you can see, because it got so low volatility, the market kind of just gets squeezed the volatility. We basically put our stop loss right on price and we get out. So the more volatility, the more space we provide it. The less volatility, the more price will hug price. Whatever, you know what I'm saying? So that's what happens. Wow, it works really well. It works really well. So that's a really good, really, really good looking graph. This is the most simple system I could honestly think of. It is the most simple system that I could think of that could work, you know. Does not trade very often. Commissions are a non-factor. Not when you hold a trade for this long. This is not getting in and out. I mean, I have my other system. What? How many trades does it take per month? I gotta see how many times it takes per month. 500 trades a month. The other one. So, I mean, this one's like, all right, 20 trades a month. Great. Sweet. All right. Now it's time to test during the summer. And the summer months, at least this summer, was not good in terms of trend, in my opinion. All my trending systems, the volatility gets drained out after April. It kind of just gets completely low volatility, really, 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 really low. The market grinds upwards, but that doesn't help us. We want kind of movement in price, and that's what the system likes. It's movement directionally. And I doubt that this summer would work. So let's look at May until August 31st, which is the full summer. We're probably going to lose. Keep in mind, let's take a picture. First of all, I want to take a picture of this. It looks damn good, right? I'd invest in this, right? Yeah, just wait until you look at the summer. Just wait until you see how things can change so much in 3 months. That was 3 months of data. Now this is going to be 3 months of data. So, I don't know. Do you think it's going to be positive? I don't know. The market was lower volatility, yet my moving average adjusts to that. I don't know. I think I'd be happy if we were flat, but honestly, I think we're going to be negative. I think we're going to be negative money. That's my bet. Oh my gosh. Bruh. That is straight down. Oh my goodness. That's horrible, bro. That is brutal, dude. Are you kidding me? How can it go from down like this to up like this? How? I think when we get in these, like, the most simple systems are just so decisive. It's clearly trendable right now. Very trendable. There's big trends moving. There's big days. There's some random big days. November 20th was one of them. The 25th, just recently was a big up day. The market seems to be moving. In, the summertime, it hasn't been like that. We take 70 trades, about the same number of trades. It's really, it's the same code. It's just negative. That's what happens. Is it doing what I want it to do? Yeah, pretty sure. Now, we can adjust the sensitivity on when we can get in. This is 6 ATRs away. So like right now, we should probably have gotten in short here, but we never got in. So there are times when we don't get in because the market needs to really push 6 ATRs away to actually get in. So it definitely changes things. So this is how we collect losses. When the market pushes in that direction, 6 ATRs away, and then comes right back up. Stops us out. Same thing here. Pushes, and stops us out. Every time it's like false starts or, hesitations. It's not helping them. Not helping us. So that's what the graph looks like. Now I want to do the May until here. So we're going to see a down and up. We're going to see down and up. And that's what happens. That's what the system is right now, I guess. Can we smooth out the equity curve? Yeah, but is that backtesting? I want the general idea to work. Now, this idea does not have filters on it. We don't have volume filters. What if we only take... All right, hold on. My son's waking up. Gotta go. Appreciate it. I would include volume filters. I'm going to test a bunch of filters. So if volume's high, only take the signals. If volume's low, don't omit those signals. Don't take them. Does that affect the outcome? Maybe. Maybe. All right. Peace and harmony. Peace.